Hello everyone, and welcome to Explain the Charts. Today is April 4th, 2025, and we're analyzing the SPY, the S&P 500 ETF, in light of the recent market turmoil. News outlets are reporting a significant market downturn triggered by President Trump's new tariffs, sparking recession fears. Major indices like the Dow, S&P 500, and Nasdaq experienced their biggest single-day drops since 2020. We'll delve into how this news correlates with what we're seeing on the charts. Let's start by looking at the daily chart. We can see the most recent candle, representing today's trading activity, shows a significant downward movement. Notice the large gap down from yesterday's close, a clear indication of strong selling pressure in response to the tariff news. This single day's movement nearly wipes out weeks' worth of gains. Now, let's switch to the hourly chart to get a closer look at today's intraday price action. We can observe a continuous sell-off throughout the day, with brief periods of consolidation followed by further declines. Zooming in further to the 15-minute chart, we can see even more granular detail of the price fluctuations. This chart shows the volatility and rapid price swings that have characterized today's trading session. Looking back at the daily chart, it's crucial to identify key support and resistance levels. A potential support level lies around 536, which acted as support previously. However, given the strength of today's sell-off, this level may not hold. On the upside, immediate resistance can be found near 545, the opening price from yesterday. If the market rebounds, breaking above this level would be a bullish sign, but it's unlikely in the short term given the negative sentiment. The Wall Street Journal reported the S&P 500 fell 4.8% yesterday, its sharpest decline since the early days of the COVID-19 pandemic, confirming the weight of the tariffs news. JP Morgan analysts have warned that these tariffs could trigger a recession in 2025, significantly impacting future growth. So, what are the key takeaways? The market is currently in a bearish trend due to Trump's tariffs. Keep a close eye on the 536 support level. A break below this could lead to further downside toward the 530 or even the 520 levels. On the upside, a break above 545 would signal a potential short-term recovery, but the long-term outlook remains uncertain unless the trade situation improves. Monitor news related to trade negotiations and economic data releases for clues about the market's future direction. The likelihood of the SPY falling below 536 in the next week is high, say 65%, especially if negative trade news continues to surface.